Here's a summary of IBM's Q3 2025 earnings call, designed for clarity and conciseness when read aloud. IBM Q3 2025 earnings call summary introduction. Welcome to IBM's third quarter 2025 earnings presentation. Today, we have IBM Chairman, President, and CEO Arvind Krishna, and Senior Vice President and CFO Jim Kavanaugh. We will be discussing certain non-GAAP measures, with reconciliations provided on the IBM investor website. CEO remarks. Arvind Krishna. Overall performance. IBM delivered strong results in Q3 2025, exceeding expectations across revenue, profit, and free cash flow. Revenue growth accelerated to a robust 7%, the highest in several years, with all segments showing sequential acceleration. This performance highlights the strength of our business model and our ability to help clients modernize, embed AI, and build resilient infrastructure. Economic outlook. We remain optimistic about the technology sector. AI adoption is accelerating, and hybrid cloud continues to be the foundation of enterprise IT. We are seeing broad-based demand from clients who are leveraging enterprise technologies to scale, innovate, and drive productivity. Strategic execution. Our strategy remains focused on hybrid cloud and artificial intelligence. This quarter's results demonstrate the impact of our products and services. Software grew 9%, driven by strong performance in automation, which was up 22%. This growth is fueled by AI-infused solutions that optimize operations and drive cost efficiency. The integration of Corp is also showing positive synergy. Consulting accelerated its growth, reflecting increased demand for AI services as clients seek expertise in designing, deploying, and governing AI at scale. Infrastructure delivered a strong 15% growth, primarily driven by the continued success of our Z17 platform, which achieved its strongest February launch on record. The upcoming Spire accelerator will enhance IBM Z's generative AI and real-time inferencing capabilities. AI as a productivity driver. AI is not only a demand driver, but also a significant productivity enhancer for IBM. We are well ahead of our $2 billion productivity savings goal for 2023, expecting $4.5 billion in annual run rate savings by year-end. Our Client Zero approach, where we leverage our own technologies to address internal pain points, has led to over 1,000 client engagements this year. AI momentum. Our generative AI book of business has reached over $9.5 billion to date. In consulting, we are leading with digital assets and services, with over 200 projects utilizing digital workers. In software, watsonx and Red Hat AI are seeing strong demand, particularly with watsonx Orchestrate, our agentic platform. We offer a hybrid approach to models, allowing clients to use IBM's Granite models, third-party, or open-source options. Our new Granite 4.0 models offer high performance, with reduced memory usage and increased inferencing speed. We've also partnered with Anthropic and announced plans to run watsonx on Grok. Client wins. We are seeing tangible value delivered to clients like Deutsche Telekom, S&P Global, Nationwide, State Street, and Crédit Agricole, who are embedding watsonx and using Z17 for AI inferencing and resiliency. Innovation in quantum. At IBM Tech Exchange, we showcased innovations like Project Bob, which is improving developer productivity by an average of 45%. We are also making tangible progress in quantum computing, with milestones like the error-corrected quantum computer by 2028 and advancements in near-term use cases, such as HSBC's bond trading predictions and Vanguard's portfolio optimization. We are expanding our global quantum presence with the unveiling of Europe's first IBM Quantum System 2. Financial outlook. Given our strong performance and portfolio momentum, we are raising our full-year expectations. We now expect revenue growth to be more than 5% and free cash flow to be about $14 billion. CFO remarks. Jim Kavanaugh. Q3 financial highlights. Revenue growth accelerated to 7%, our highest in years, with all segments improving sequentially. Profitability. Revenue scale, mix, and productivity drove 290 basis points of adjusted EBITDA margin expansion, 22% adjusted EBITDA growth, and 15% operating earnings per share growth, showcasing significant operating leverage. Free cash flow generated $7.2 billion in the first 9 months, achieving our highest 9-month free cash flow margin on record. We exceeded expectations across revenue, profitability, adjusted EBITDA, EPS, and free cash flow. Segment performance. Software. Revenue grew 9%, with strong organic growth and a 9% increase in our high-value annual recurring revenue base, $23.2 billion. Automation accelerated to 22%, benefiting from organic portfolio strength and early HashiCorp synergies. Red Hat bookings grew approximately 20%, and revenue grew 12%, with OpenShift ARR now at $1.8 billion, up over 30%. Data and AI grew 7%. Transaction processing declined 3%, influenced by clients prioritizing hardware spend on Z17, but a healthy pipeline positions us for future demand. Infrastructure grew 15%. Hybrid infrastructure grew 26%, led by IBM Z's 59% year-over-year revenue increase, driven by Z17's AI and hybrid cloud capabilities. Distributed infrastructure grew 8%. Consulting returned to growth at 2%, improving sequentially. Intelligent operations grew 4%, while strategy and technology revenue stabilized. Demand is strong for AI transformation and modernization solutions. Our consulting generative AI book of business exceeded $1.5 billion this quarter, with project numbers doubling year-over-year. Profitability and productivity. We delivered 9 consecutive quarters of operating pre-tax margin expansion. Revenue scale, mix, and productivity drove 120 basis points of gross profit margin expansion, 290 basis points of adjusted EBITDA margin expansion, and 200 basis points of operating pre-tax margin expansion. Segment profit margins expanded across all segments, with consulting margins at a 3-year high. Productivity initiatives, including AI deployment across IBM functions, are a key profit driver, contributing to our expected $4.5 billion in run rate savings exiting the year. Free cash flow. Through Q3, we generated $7.2 billion in free cash flow, up $600 million year-over-year, driven by adjusted EBITDA growth and partially offset by working capital dynamics. We maintain a strong liquidity position with $14.9 billion in cash. Full year 2025 outlook. Revenue growth, now expected to be more than 5%. Adjusted EBITDA growth, expected to be mid-teens. Free cash flow, expected to be about $14 billion. Segment expectations for 2025. Software, approaching double-digit growth, with automation expected in the mid-teens. And data in the high single digits. Red Hat growth is expected at the low end of mid-teens. Infrastructure, expected to contribute over 1.5 points to IBM's revenue growth this year, with transaction processing returning to growth in Q4. Consulting, expecting fourth quarter revenue performance similar to our third quarter growth, with continued momentum. Profitability outlook. We are raising our full-year operating pre-tax margin expansion expectation to over a point. Key statements. Arvind, Krishna, CEO. Clients continue to turn to IBM as a trusted partner to help them modernize, embed AI, and build resilient infrastructure. Technology remains a key driver of growth and competitive advantage. AI adoption is accelerating, and hybrid cloud remains the foundation of enterprise IT. Our strategy remains focused on hybrid cloud and artificial intelligence. Our products and services fuel growth and productivity for our clients. AI is also a powerful productivity driver for IBM, contributing to our strong financial performance. Our Gen AI book of business continues to show momentum at over $9.5 billion inception to date. In closing, we are executing on our strategy of accelerating revenue growth and delivering higher profitability. Given these results and the momentum in our portfolio, we are raising expectations for revenue growth to more than 5% and free cash flow to about $14 billion for the year. Jim Kavanaugh, CFO. Revenue scale, mix, and productivity drove 290 basis points of adjusted EBITDA margin expansion, 22% adjusted EBITDA growth, and 15% operating earnings per share growth, highlighting the significant operating leverage in our business model. And through the first 9 months, we generated $7.2 billion of free cash flow, our highest 9-month free cash flow margin in reported history. Given the strength of this performance, we are raising our expectations for revenue, adjusted EBITDA, and free cash flow. We now expect to deliver revenue growth of more than 5%, adjusted EBITDA growth of mid-teens, and free cash flow of about $14 billion for 2025. We are raising IBM's full-year operating pre-tax margin expansion to over a point. Significant risk factors implied from discussion: macroeconomic uncertainties impacting client spending, competition in the AI and hybrid cloud markets, execution risk in integrating acquisitions like HashiCorp, challenges in the consulting market, particularly with the shift from staff augmentation, regulatory environment impacting M&A. Highlights: accelerated revenue growth to 7%, highest in years. Strong performance in automation, up 22%, and infrastructure, up 15%. Significant progress on generative AI book of business, $9.5 billion plus to date. Raised full-year guidance for revenue, greater than 5%, and free cash flow, $14 billion. 9 consecutive quarters of operating pre-tax margin expansion. High free cash flow generation and margin. Positive outlook for future growth driven by AI and hybrid cloud. Lowlights: transaction processing revenue declined 3% due to a shift in hardware spend priorities, though pipeline is strong. While overall consulting signings declined, the quality of signings is strengthening. Red Hat's growth rate, while strong, is expected to be at the lower end of mid-teens in 2025. With some headwinds from consumption-based services wrapping tougher comps. Management forecasts for future quarters: 2025 focus, with 2026 outlook. Full year 2025. Revenue growth greater than 5%, adjusted EBITDA growth mid-teens, free cash flow $14 billion, operating pre-tax margin expansion 1 point. Q4 2025. Comfortable with consensus estimates for constant currency revenue growth and profitability. Red Hat expected to see solid double-digit growth. Transaction processing expected to return to growth. Consulting revenue growth similar to Q3. 2026 outlook: confident in continued growth driven by accelerated revenue, operating leverage, efficient balance sheet, strong software portfolio aligned to high-growth markets, robust annuity base, Gen AI innovation, Red Hat's inflected growth, ongoing M&A, and transaction processing monetization. This concludes the summary of IBM's Q3 2025 earnings call.